Hello traders and welcome to another video review. Today is Tuesday, July 23rd, 2024. Let's find out what's going on the economic calendar today. Not too many important data were released overnight, and the next important data is the ECB Lane speech at 9 o'clock. Then we have unemployment rate data from Poland, and then at noon we got the Eurogroup meetings. 1 week repo rate and overnight borrowing rate together with the overnight lending rate in Turkey will be established today at 1 o'clock. So right now the 1 week repo rate is 50%, and the market participants expect for the Turkish lira to stay at the same level of 50% as the interest rate. New housing price index from Canada is scheduled for release at 2:30, and then at 4 o'clock we got the key event of the day, existing home sales from the US. 2-year note action from the US is scheduled for release at 7 o'clock, and API weekly crude oil stock is scheduled for release at 10:30. So as you can see, not really busy day ahead of us. We got one important data releases. Very important data releases from the USA at 4 o'clock. Otherwise, the day should be pretty smooth. This is why let's find out what's going on the charts. We are going to start with euro dollar. The 4-hour chart of the euro dollar is showing us the another deterioration to the downside. We got the marginal new low at 1.0874 as the market keeps consolidating in a relatively narrow range between 1.0874 or 1.0904. So this is like a 30 pip range. The momentum is still negative. The momentum is still below the level of 50, and the bears are in charge of the market as expected. So we are waiting for the bears to push this price lower towards the technical support at 1.0853, 1.0847. In between this zone there is a 100 periods moving average as well. So it's a quite strong support, and it might bring some kind of activity from the demand side. We might see some kind of a bounce when the market hits this level. So please stay focused, stay vigilant on the euro dollar. Let's take a look at the Japanese yen. And the Japanese yen, as you can see on a 4-hour chart, has failed to break above the supply zone. The marginal high at 157.87 wasn't enough for the bulls to continue the up move towards the 100 periods moving average, which is why we reversed lower, and now we've made local low at the level of 157.21. So this level here, 155.39, is next for a test. As you can see, the bearish situation here resulted in a bullish divergence. The market made new swing lows and the momentum didn't. However, the bulls were not strong enough to break above the level of 50, above the neutral level on the RSI, in order to rally higher. They just went towards the supply zone, and then the bounce from the 155.39 was capped. Market reversed. This level here is next for a test. Let me just mark it with my arrow. There you go. So you possibly know that we are going towards this technical support. It should be tested relatively soon. And of course, the key supply zone located between 157.90 and 157.75 is still intact, and it's a key zone for the bulls if they want to continue the uptrend. So we know exactly where to look on the chart, on a 4-hour chart, to see whether the bulls are now stronger or weaker than usual on the US dollar to Japanese yen. Let's find out the crude oil market ahead of the API data. As you can see, the crude oil market is going lower towards the level of 78.20. This is the low of the recent move. However, this low was made on the extremely oversold conditions. So right now the situation on the crude oil looks very interesting. The recent swing high from 72.48 towards 84.51 has been completed, and now we do this very interesting correction to the downside. So the level of 84 is still the key technical resistance, so we need to mark it here, and the other levels will act as the technical resistance as well. It used to be a support at 18.80, so right now this level will act as a technical resistance for the price. The next support I'm trying to find might be located around 77.23, so that's the green line, and this one at 80.18 is the red line. So there is no bullish action, there is no uptrend continuation without breaking above the level of 80.18. The market is already below 50 and 100 periods moving average. They crossed around the level of 81.91. So it's clear that the bears are in charge of this market. Let's see how deep we can go. Of course, I need to mark one more level here, the swing low located at 72.48. This is the major technical support. So the outlook for the crude oil remains slightly bearish. It all depends how deep the price will be pushed. Okay, last but not least, let's take a look at the Bitcoin. What is Bitcoin doing on the 4-hour chart? As you remember, we've been following our impulsive cycle to the upside, 5-wave cycle according to the Elliott wave. That resulted in a bearish divergence last time, as the divergence was established between wave 3 and wave 5, which is typical for this kind of a movement. And you can see it on the RSI indicator as well. This time we've made a high at 68,504. Then the market started to consolidate the recent gains and moved inside of the let's say horizontal zone, right, the range zone. And the low level of the zone is 64,444, which is now being tested. And please take a look at the momentum. Momentum hit the level of 50, so the neutral level is being tested as well. There is still room to the downside towards the lows of the wave 4 around 63,233, and if we deteriorate towards the lows of the wave 4, it would be a textbook example of how the correction is developing. Okay, after a 5-wave rally to the upside, ABC pattern or maybe some other pattern, maybe complex pattern, should emerge, and the typical target for this kind of a corrective pattern is a wave 4 low. So right now what we do, if we take the Elliott wave correction wave, let's say this is that would be the let's say typical pattern, simple pattern, ABC correction. It looks like this is the next cycle we should see on the Bitcoin, and it might accelerate when we break below the level of 50 on the RSI, because it looks like this situation here begs for nice correction to the downside, and then the uptrend should resume. All right, so the next step after the simple correction, ABC simple correction is done, should be the uptrend resumption to the upside. Should be something much more dynamic, and the prices should be way higher. If, however, there is no such a thing as uptrend resumption, or this cycle here will develop into let's say impulsive one, then of course, unfortunately, lower levels should be expected. That's everything from me for now. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.